Hello, welcome to today's Fat Tail Daily. Woody here as normal. Now, you know the Chinese curse, may you live in interesting times. Well, Ryan Dinse, my guest today, his first episode back from a long break. His latest piece suggests that we're living through one of the most interesting periods in market history. But rather than seeing this as a curse, he's found some fascinating opportunities in what he calls, or it's based on a book actually called The Fourth Turning, which talks about a period of massive change that could reshape everything from tech monopolies to the global financial system. Now, what really caught my attention, though, was how Ryan connected the current market turbulence from DeepSeek's AI disruption to Trump's tariffs, which really affected the markets over the weekend, to historical patterns of change and why this might actually be good news for investors who are ready to adapt. So, Ryan, welcome, buddy.
Hi, how are you going, Woody?
I'm good. Let's start with something intriguing from your piece today, and this is the idea that we're entering an unraveling phase. I believe this is the fourth turning in the four turnings, where the old rules no longer apply. Can you just elaborate on what this means practically for investors?
Yeah, so the book I'm referencing here was called The Fourth Turning, and it was written in 1996 by I think it was William Strauss and Neil Howe. It was a very popular book. It was a best-selling book. You've got it on your bookshelf, I can see. And the idea was that civilizations tended to follow predictable patterns or predictable cycles, and it was split into four periods. And each period lasted roughly 20, 25 years. And it sort of reflected the cycles of nature. You know, you had a period of growth, a period of maturation, a period of stability. But then towards the end of that 100-year cycle, there was a point where things unraveled. And that was when you had a sort of changing of the guard moment. And you had a bit of resistance against the current norms. And I sort of made the case in today's piece that we're sort of in that period, in my opinion. Everyone knows, empires rise and fall. We've talked a lot in the past on this channel about the debt situation in the world, American US debt specifically, which is, very high currency debasement, which has been ongoing. You could argue in a big way since the GFC in 2008, even, money printing, quantitative easing, all these terms that we'd never heard until the last decade, which have just been ways to keep kicking the can along the road and trying to maintain the old order of things. What I think we're seeing now, especially with the election of Trump, who seems to be a bit of an accelerant of this unraveling, is that old order is falling apart. And that will be driven in part by politics and economics and technology. So you've got these three prongs that are going to unravel it. And on the political front, over the weekend, we've had Trump's tariffs. Now, tariffs in themselves are nothing exciting. Tariffs have been around as long as economies have been around. But who are the first two countries Trump's putting tariffs on is Mexico and Canada, two of America's biggest trading partners and supposed friends. He's talking about doing it to the EU next. Again, supposed allies of America in geopolitics. So you can see that's a massive statement. That is saying, what he's saying is, we're America, we'll look after America, and we don't really care about the old alliances or the old ways of doing things. We'll do whatever suits us. And the old system where we're the patron and we try and maintain global order is not the way we're going to go now. So you've got that political instability that is now clearly being signaled, and that has an effect on markets. And we'll probably see that when the US market opens on Monday night. We're seeing it in other assets already. We're seeing a lot of volatility start to hit, and that volatility is taking place because people are uncertain what this means. People don't go to this realization straight away that we're in an unraveling. Usually they go through a period of resistance and denial, and you'll get a lot of people saying, "Oh, this won't work," and the tariffs will backfire, and they'll wind them back, and it will go back to the way things were. But I sort of the opinion that we won't go back to the way things were. I think we are seeing a slow unraveling of old ways of doing things. And this is just the start of that process. So that is, comes to another Chinese saying that I brought up in today's piece is, the word for crisis and opportunity in Chinese, the character for that is the same. I remember our colleague Greg Canavan used to have a newsletter based on that concept, crisis, opportunity, two sides of the same coin. And I think what we'll see in the short term is a lot of people viewing what happens over the next few months as a crisis, and that will spur volatility. But if people turn that coin around and realize what's happening, they'll find that there's opportunity there as well.
Before I come to a question on those opportunities, can I just ask more of another thing? Like, why are the tariffs a big enough thing to be an unraveling? So a lot of the events that happen at the end of these big cycles, especially it's outlined in the book, is like some kind of cataclysmic war, or do you know what I mean? I don't want to be doomsday about predicting anything like that, but is this big enough, like, or is it like, as you say, because Trump's pretty adamant that it's a good thing in the long run, yet at the same time he's even said it's going to be hard initially. It's going to be
look, that's the essence of a fourth turning point. They are periods of strife that lead to a good outcome when the new cycle begins, and you get that rebirth, renaissance period. So, in that sense, he's right. But come to your point, yes, these fourth turning points usually historically coincide with stuff like wars. What I'm hopeful of is that this is going to be more of a trade war situation, which is more of a realigning of international agreements. You think we've got all the post-World War II agreements that have been in place for decades, the Bretton Woods, the Plaza Accord, which is a big currency agreement, and stuff like that. I think what we're seeing is that will start to unravel. And that is, it's less about these specific tariffs and more about the signal Trump made by saying, hey, Mexico, Canada, first two people getting tariffs. That's a big signal. That is saying we don't care who you are, what the history of us is, and what it might mean for our specific trade relationship. We want to reorder things. And Trump's got ideas on how he wants to reorder things. He wants to bring America's manufacturing base back onshore, because for decades, America's just offshored everything. They've hollowed out their manufacturing base, and now they're stuck in an economy that has, a really hollowed out technological manufacturing base, which is left to other parts of the world, and that is a disadvantage. Trump sees that as a strategic disadvantage, and from a society's point of view, it locks people out of some of the highest paid jobs and some of the best jobs to have. So he wants to bring US manufacturing back. He doesn't want to give up control of the dominance of the US dollar, but he wants it to be weaker to help their exporting ambitions, and he probably wants to bring interest rates down. At the same time, he wants to cut government debt massively. Another thing that he did in the last few weeks was I think he pretty much gave every federal employee the option to resign, which cuts $4 billion a year out of the budget if 10% of the people took it, and he'll give them like an 8-month severance or something like that. So he's trying to do a bunch of stuff, and he's trying to do it all at once. Like, he's doing a lot right now. He's not really. I think what he maybe learned from the first term it was all about who are the people you're going to put in the positions, what do you do, and he tiptoed around a lot of stuff. I think what he's learned for his next for this presidency from the first term is that he's just
much more prepared.
He's going to do stuff, and there might be pain in the short term. But coming back to your point, is this a cataclysmic event? It doesn't necessarily need to be a cataclysmic event. Like, I'd much prefer a trade war to be the situation, but what it will result in countries like Canada, countries like Australia, countries like Britain, the EU, China. They all have to reevaluate what they do going forward, and how they deal with an America first president that's not even pretending to honor the global, rule of law or whatever they want to call it. He's not going to even pretend to do that. Because I would say a lot of American presidents pretend to do that, but they might not actually do that in practice. They do look after America, but Trump's not even going to pretend to do that, and he's not going to, at least at the start of his presidency, he's not going to be holding to markets or what economists or what they try and tell him to do. So I think that's interesting because America has had such a dominant role in finance and money specifically. The US dollar is the world's pristine asset. But that has been on the decline over the last 10 years. China, Russia, BRICS countries are all looking to win themselves away from that. And this situation only, exacerbates that trend, which was already happening. But it'll be interesting to see, do countries or regions like the EU and Britain rethink their relationship to US dollar dominance as well? Because they piggyback a lot of US dollar dominance as well. They have privileged access to what they call swap lines, which is access to US dollars, which means whenever there's any of these big financial crises, the Americans essentially bail out their friends with these swap lines. you can see they did that with Japan. Remember, we talked a few months ago about the carry trade unwind stuff. That's what they did with Japan. They just, they gave them a line of credit to help them get over any dramas. But do you trust a Trump presidency will do that for you? And if you don't, do you rely on the US dollar as your pristine asset, or do you move? Do you move to gold? Do you move to Bitcoin? Do you move to try to shore up your own currency in another way? So these are all big things. From an economic point of view, these are seismic changes that only happen once every 50 years or so. And I think that is what is underway right now. It won't happen all at once. And as I said, you'll get this period where no one thinks that's happening. There'll be resistance, there'll be doubt, there'll be, people thinking it will go back to the old ways of things. But in my opinion, I think 2025 at least will be that unraveling of those old norms, and then new norms will come in, or new agreements, or new rules of the game, as it were.
And as you say, the other sort of rotation or the other unraveling will be the dominant companies as well. So you mentioned the potential end of the Magnificent Seven's dominance.
Yeah, that's a theory. Yeah.
Do you do you think AI is going to play a role in that?
Yeah, so the theory I had here, again, these are theories, and I think the best way of looking at these things are strong opinions weakly held. You have to have ideas on what you think will happen, but then look at the evidence to see if you're right. But the narrative that's played out over 2024 at least was that AI is not like the dot-com boom. With AI, the Mag 7, your Googles, Microsofts, Apples, Metas, they're going to dominate AI because they've got the capital needed to make it work. And so you're not going to see like the 1997 to 1999 or 2000 era where you had all these startups in the internet boom that came in and ended up turning into Google and Amazon and all that. And they started as small startups and they ate everyone's lunch. The narrative last year was that's not going to happen with AI. But what DeepSeek showed last week, and that was probably the other big story, was that hang on, these things are not as expensive, with a bit of innovation. DeepSeek could have come from a small Midwest tech firm. If they could have done this, all they did was they worked out how to make their model in a smarter, more efficient way. And so it's definitely put a big question mark on the narrative that AI is going to be owned by the big tech firms because only they have the capital to do it. Now it's suddenly saying, hey, they might have the capital to do some aspects of it, but there's a lot that we can do with the models by working smarter. And as you see more and more money pour into AI and AI startups specifically, that knowledge is going to get dissipated. And I think, in my opinion, you are going to get that dot-com era of, the sort of, what do you call it, that sort of innovation and disruption and stuff like that coming. And I think it will happen. And I think again, I think that is what Trump is going to enable. I think the previous administration was more likely to try and gatekeep AI. And a famous VC, a venture capitalist called Mark Andreessen, said that. He said he had government officials saying, no, only certain companies in America will be allowed to do AI, and we'll say it's for safety reasons. And he's a venture capitalist, and he was dumbstruck by that, saying, how come the government's deciding who can do AI? And that's because the previous administration wanted to gatekeep AI and have their chosen winners. Whereas I think under the Trump admin, it's more like free market. Whoever wins, wins. He will obviously support American companies over maybe Chinese competitors, but he's more likely to open up the market to competition. And I think that will also apply with big finance. I think, we've talked before about he's more of a crypto-friendly president. And he's even launched his own meme coins, which is doing terribly now after the initial pump. But the fact that he will allow the competition to take place is what you need in a capitalist economy. What capitalism is good for is that creative destruction, is that free market. Where capitalism fails is when it becomes crony capitalist, where it becomes governments and regulators pick the winners. And that happens in finance a lot. It's ridiculous to me that we have 4 or 5 banks in Australia that dominate everyone's financial life. Because even today, I can operate on a system out with the banks using crypto tools. I can do that today. The only reason it doesn't happen is because the regulators make it so hard for people to move into that system. But technologically wise, I can send you an asset or money or whatever in about 3 seconds for like a fraction of a penny. And I can do that without touching the banking system. So the tech's there. The tech's there to disrupt the banks. What will be interesting to see is, does the American market say to their big finance companies, hey, you've got competition now, deal with it? Because then we could see at some point in 2025 a massive rotation into fintech and crypto platforms.
That was actually going to be my next question. So you highlighted the two major trends, and as you just said, fintech and crypto, uh, against the potential decline of US dollar dominance, right? So I was going to ask, how do those trends intersect, particularly given in the knowledge that institutional chart that you showed, JP Morgan's gold buying. So obviously that shows you they see something's up or the writing's on the wall.
Yes, we talked about this morning in our editorial meeting where the Bank of England have got all this gold in vaults that they store for investors around the world. And it used to be if you want to redeem your gold, you'd go through a process, and a week or a few days later it would get sent out to you. Right now, there's massive delays on people getting their gold back, which leads to the question: people saying, "Does it have the gold?" And JP Morgan's been buying it. It's been trying to repatriate its gold from vaults around the world into New York, into their own vaults. But the fact that the Bank of England is struggling to keep up this redemption process is an interesting sign. And the fact that JP Morgan's buying gold, and we all know that the BRICS countries have been net buyers of gold over the last decade, China and things like that. So you're definitely seeing that gold. I think our gold analyst Brian Chu said gold's at all-time highs, I think, especially in Australian dollar terms. So yeah, you're seeing that already playing on the ground. So what do these big players, why are they doing this? They want a hedge. They want an alternative system. The point I would make as a sort of Bitcoin, proponent of Bitcoin, saying, well, if the Bank of England doesn't give you your gold back, what can you do? You can't do anything. That can't happen with Bitcoin. You store your own Bitcoin in your own wallet. Or if someone does custody it for you, you can see where it is at all times, and they can send it to you in a matter of minutes.
Yeah, so they can't confiscate it or send it on to anyone else. Yeah.
So I think that's the advantage of Bitcoin versus gold, especially in a combative, tariff-ridden era of international trade where no one trusts each other anymore. You're going to rely on someone to hold your gold? No, you're not. What if you can't repatriate your own gold? Which I think that happened to a South American country last year, didn't it? They tried to get their gold back from the Bank of England, and the Bank of England basically said, "No, we're not going to give it to you." Which sounds ridiculous, but that's what they said. And on that point, which is tangential but it's related, is the Department of Justice in America last week is fighting a court case where they confiscated $50,000 of someone's money. And their argument in this court case is that money's not property, so we can confiscate it if we want, because obviously in America they have property rights. But the Department of Justice argument in this case, which hasn't been won or lost yet, but if they win, it's an interesting precedent. They say, well, money isn't actually property. Money is all money in the system is under the ownership of the government. So if US dollars are not your property, or if dollars in general are not your property, then you don't necessarily want to hold your money in that asset, because there's legal implications for that. You want to hold your assets in a property. Bitcoin is a property; it's a commodity. Gold is a commodity; it's a property. Real estate, it's a commodity. It's it is literally a property. So that's an interesting dynamic playing out as well. So you can see there's all these clues, there's all these signals, and there's all this chaos. I think the hard thing for investors right now is just trying to unravel it all, but you don't necessarily need to unravel, to use that word from the fourth turning, but you don't need to necessarily understand or predict everything that's going to play out. But I think what you need to do is maybe understand that this unraveling process is taking place, and that means you need to think through your processes, your investment strategies, and see if they still make sense in a world where those norms might not apply. Because a lot of things in the past have been relying on investing in large cap stocks or investing in index funds, and that's worked for a lot of people. It might not work in a disruptive era. So you need to really think through your processes, I think.
Yeah. All right, Ryan, we'll leave it there. Thanks for your chat. We've discussed this for about 20 minutes, pushing on half hour. Really fascinating and a good one. If you would like to read Ryan's original piece, do click. It's in the description below. It will take you to our website. You can read it for free, as always. And I'll speak to you again next week, Ryan. Welcome back.